You see, what happens when you have provident fund, then you resign job. You normally get. Hello good people, welcome back to Rayc Rachael YouTube channel. Guys, in this channel you are going to have fun. Also guys, you are going to learn. So guys, today in my video I've decided to teach you guys something, and I know guys you are going to learn, you are going to enjoy guys. So guys, I've decided to teach you something about retirement, because most of people guys are approaching retirement, and I know majority of them retire when they are not prepared guys. So guys, I've come to give you solution about this retirement. It is something actually which bothers many people actually, when they know guys, I'm almost remaining with 2 years, then I go for retire. So guys, ask yourself, how prepared are you? How prepared are you when you're going to retire? Guys, you are remaining with 5 years to go to retire. Guys, come here, I give you solutions. You are not going to bother about retirement anymore, guys. I'm here to give you solutions. So guys, I know in front of me you can see I've come with trophies guys. If you normally follow my videos, my first video was about my best corner in my house, and if you watched that video, I talked about each and every trophy you can see in front of me. So guys, if you didn't watch that video, kindly go back and watch that video. It's my first video to drop in YouTube. So guys, those who didn't see that video, you can see here I have trophies guys, and you can see some logos kama hii. Kuna logo ingine hapa, there is another one, kuna ingine hapa, kuna ingine hapa. So guys, I can just brief you about each so that we can now go direct to retirement solutions. So our topic guys for today is retirement solution. Guys, if you actually know you are 40 to 70 years, guys, don't leave this video unwatched, because guys, I'm going to give you a solution. We are going to solve a problem, guys. So guys, yeah, on my left side, there is a logo, it's very heavy. It's a logo. This is a logo for Kenintia. If you can see my t-shirt, my blouse, sorry, it has a logo which matches my trophy. So guys, I won this trophy last in 2021. I was number 2 countrywide as the best team leader, guys. So guys, this tells you what the person is giving you, the financial solution is not that as information. So guys, keep locked. On my right side guys, there is another trophy which is also Canadian logo, and this one guys, I also won it in 2021. So guys, it's like 2021 actually was my best year guys, and this trophy I won is the best life financial advisor. So guys, yeah, here comes your advisor. So guys, listen keenly. So guys, I brought these trophies here so that those who think I'm not going to give you solution now can have some trust, because there are people who need trust. So don't think that I'm wasting your time when I'm showing you this, or it's a show off. No guys, there is another one here. Guys, do you know what is this? This is called Aki Award Trophy. So guys, Rayc Rachael is an Aki champion. I'm an Aki champion, guys. So guys, what is Aki? Actually, guys, Aki is Association of Kenya Insurers. So guys, Aki, it's an award. It's the actually top award for all insurance people. So we normally compete for this award. If you go for this award, you are a top achiever, actually, guys. So Aki award, every insurance company, I know maybe you have an insurance with another company like ICA, Britam, Jubilee. So guys, every financial advisor who is productive, or who knows who works well, or who is great in this, goes to Aki. Or you can ask your financial advisor, what is Aki? Have you ever won Aki award? So guys, if you have a financial advisor and have never gone to Aki, guys, look for Rayc Rachael to give you the best financial advisor. So guys, this Aki award was for 2021, and I was given this award as number 3 countrywide in all insurance industries. Guys, I won number 3 from India. Number 3 was from India, guys, and it was Rayc Rachael. So this was my trophy for 2021, position 3. Eh? So guys, here is another. It's another heavy trophy, guys. It is called Managing Director's Shield. Guys, you see this? This normally rotates in our company. For everyone, the one who comes number 1 on this is the life agent of the year, goes with this shield at home. So guys, this one rotates. If guys I didn't win it last year, it is going to go to somebody else. So this is a trophy that can be in my home this year, and another person can win it. So it's a trophy that everyone can get, and if you win, they normally stick your name with the year you have won on these walls. So ikinja, they are going to bring another one. So I won it in which year? Where is Rachel? Denke, I won it in where is Rachel? Rachel won it in 2021 also. So guys, you can imagine 2021 I came home with how many trophies? 4 trophies. Also guys, the last one is a certificate of recommendation from Aki Award, position 3. This one came along with the other trophy I've shown you for Aki. So this is my certificate, guys. I'm certified, guys. I have license, guys, and I have everything which you need so that you can trust Rayc Rachael on the financial advice. Guys, we can now start about retirement. Let's talk about retirement. So the first question, guys, I need you to ask, I need to ask yourself is, how prepared are you about retirement? How prepared are you about retirement? So guys, I'm going to teach you some things about retirement, and not else other than we're going to talk about pension. I have solution for you guys. When I talk about pension, I know now in your mind, if you are not employed, you are like, we are talking about pension, yet I'm a business person. Guys, keep locked. I have a solution for even business people. I'm going to talk with everyone who is employed and who is not employed. Guys, keep it locked. So, pension, guys, if I can start about pension, is for everyone. Pension is not about you're employed or you are not employed. So, guys, don't say that I cannot prepare for retire and I am not employed. So I can start with those people who are employed. Guys, I normally tell person this. I normally tell my people this when I meet my clients. I normally tell this. if you are working, right now I'm talking to those people who are employed. I normally tell them this. If you get an opportunity to work, next thing you are needed to do is invest. After investing, now you can retire. So when you skip investment, then retire, what do you think? You are going to be a useless person on retirement. You are going to die early. You are going to have a lot of problems because, guys, you need to eat after retire. You also need to continue paying your bills. Your bills will also need to be paid on your retire. So, guys, if you are not prepared enough about retirement, this tells you that on your retirement time you are going to suffer. So kindly, people, can we invest enough for retire? I know now people are talking about I've invested enough. Guys, I have come here to tell you about investing with insurance for retire. I'm not saying that investing in other things like plots, investing in other things like what? Where do we invest apart from plots and whatever? Yeah, invest in business, it is not bad, but I've come with another better solution, because investing in those other things, invest in those other things. Listen, my person who have bought a plot and you say that we have invested enough, and when we meet you tell me that I don't trust insurance. Come here, I need you here to listen to this. Guys, I'm telling you this. There are three things which can shake your investment. Three things which can shake your investment, guys. Name number one. Those who are in my WhatsApp, I know you saw this sometimes back. I posted this. One thing which can shake your investment is death. For your information, when you think you have invested enough in plots, listen to this. You don't know about tomorrow. I can die, you can die. So this shows that in case you die, you are leaving people behind. Ask yourself, are these people going to take care of your plot? Can these people sell your plot? Can these people start competing about your properties? Ask yourself that question, because most people, when they die, you find that those people are left behind. Like, assume you have a spouse and you die. You have a wife and you die, you the breadwinner, and you think you have invested enough, you die. What happens? Maybe your parents can start competing with your wife about this property you have left. The other time you saw a politician who competed with the wife of the deceased. The mother of the mother started competing with the spouse, with the spouse who was left by the deceased, started competing about the property which was left. So guys, when you go to court, this property you can share equally. The court can decide that the spouse to share the property with the mother. So you, the breadwinner, thought you are buying the plot for your family, but now here comes your mother, wants a share. So guys, have you invested enough on that? I have a solution for that. There is an investment for retire that you cannot compete even in court. The person who is documented is the person to receive your payment. So you are in safe hands, guys. Another thing which can shake that property of yours is divorce. Divorce is divorce. To explain a bit on this, when I say about divorce, I mean you are married, then you have a joint asset with your wife. Then here comes divorce. You go to court, this property you share equally. This property you share equally. You saw it on Citizen. Yeah? You share property equally if you acquired the property together. So the divorce can shake your property. So I have your solution for retire. If you are married, I have a solution for you which cannot shake your investment. Guys, another thing which can really shake your investment is desperation. Do you know what is desperation? Desperation is anything can come up. Anything can come up. Then you need a lot of funds. You need money. Guys, then what will happen? You are going to sell that property of yours so that you can sort your problem. You are going to sell your plot, you solve your problem. Another desperation is about you can be auctioned. Your property is gone. Guys, listen to this retirement solution. So I think I've bought a plot. People have now calmed down. So now you can listen to Rayc Rachael about a financial solution, and now we can go direct to our pension scheme. Pension scheme, it's when I talk about pension scheme, I'm going to talk about pension scheme for Kenindia Insurance, which I know it is the best in pension. It's the best pension provider. Are we together? Kenindia Insurance Company is the best pension provider. So let me take you through the pension scheme for Kenindia, guys. And under pension scheme, we have those people who are provident and there is a pension. For example, so that you can understand more about pension, if you are a teacher, I know you have pension scheme and with TSC. TSC. So when, for example, when you die, that pension it's paid to your dependents. When you retire, there is some amount you people normally receive. People normally receive on your retirement. That is called pension. Then how much do you normally receive on your retirement? When you retire, you are given a third of your accrued amount. Of your accrued lump sum amount, you get a third, then the 2/3, it is left for you to buy something called annuity. You see, in Kenindia we have annuity. I'm going to tell you what is annuity. So because you have a lump sum amount which is left, that is 2/3. Remember, you have received your 2/3. When you retire, I've said you receive a third, then the 2/3 you buy annuity. Meaning what? When you buy annuity, there is some money you normally receive every month, like a person who is working. That is annuity. I'm going to speak it after the pension. So that is about pension scheme. I said pension scheme it's divided into two. That is pension and provident fund. Now, my people, in industries, you see, those people who work in industries have provident fund. I know you normally see in your payslip you are deducted something, we call it provident fund. What is provident fund? Guys, provident fund is a bit flexible. It's a bit flexible because when you are deducted provident fund, actually they deduct 5% of what you are earning. You see, 5% of what you are earning goes to provident fund. Then the benefit of the provident fund is that when you retire, you can get that lump sum amount. This money is meant for retire. You get that what you have been deducted, the whole amount. Then there is some interest you have been earning. Like, assume your deducted provident fund by Kenintia. 5% comes to us, then employer will also give you 5%. So you are deducted 5% and your employer gives is 5%. Then now what will happen to Kenintia? Kenintia will give you interest of 11% every year. So you are earning 11% yearly of your total amount which is deducted. There is employee share and there is employer's share. So in total you are going to earn 11% yearly. So guys, this tells you that you are prepared enough for retire. So imagine when you get unemployment and you start being deducted this amount. By the time you are retiring, guys, you are going to have good money because employer share, your share, then you want this 11%. Guys, you are prepared enough for retire. Then what happens when you have provident fund? Then you resign job. You see, what happens when you have provident fund, then you resign a job. You normally get 50% of your total share, meaning 50% of your accrued lump sum amount. That is what you are going to get. Then the other 50% is left with your pension provider, so you can come for it when you reach a retirement age. Remember, this scheme is just for retire. So when you resign at 40 years, it means you are not achieved the retirement age. So your 50% will remain with the pension provider. When you reach 50 years, you are going to come for the 50%. So now you can go for your retire. Have you understood that? When you resign a job before retirement age, Kenintia will give you 50%. Then the other 50% you are going to get it when you reach the retirement age, which is 50 years and above. We together. When you resign a job and you are 50 years, you can get your full amount. We together. And this amount, remember, as interest, because the interest we are giving you right now is 11%. Are we together now? Good. That is about provident fund. You have understood when you resign and when you resign when you are young and when you resign when you are at retirement age. We together, guys. Let's now talk about you have not resigned, you have retired. Not necessarily that you resign, you can work until retire. Then you add provident fund. You come for all your money, 100%. You're going to get 100%. You're going to get 100% of your accrued money plus the interest you have earned. So guys, this money we are going to pay the person who is documented. So guys, I said we have the financial solution for you when you go for retire. So you can imagine getting your 5 million on your retire. You are on the safe side. You can pay your bills. You see? So guys, that is about provident fund. Now, I was talking to those people who are employed. So guys, now I can now speak to those people who are in business. When you're in business, guys, remember that you have no employer. You are the employer. You see, you have employed yourself. You can also take our provident fund. We call it individual provident fund. Meaning you contribute for yourself. Guys, the minimum you can contribute for pension when you are employed, it is 2,500 per month. You can be remitting 2,500 per month to our pension scheme. You will have a policy document showing that it's your provident fund. You give details of your dependents. Then every month you contribute 2,500. You also earn 11%. But you know you are the employer of yourself, so no share for another person. So it's only your share. Then Canada is going to give you 11% yearly. I hope you are together. So now, guys, I said there is something called annuity. Can go now to direct to annuity. We have talked about pension. So annuity, guys, inazaliwa na pension. Meaning what? Canada has a product called annuity. What is annuity? Annuity is a lump sum amount. You give us a lump sum amount, you see, then Canada will pay you every month. You'll be receiving money. It's like you'll be receiving salary every month. You give us a lump sum amount, then every month you are going to receive money as if you are employed. So this one shows you like this. If you have retired and you have received your pension money, assume you have received your 5 million, you can buy annuity. When you buy annuity, you give Canada the lump sum amount. That is, you are like 5 million. For example, you give 5 million, then Canada will give you a quotation of how much you are going to receive every month. So you are going to earn while you are retire. The way you used to earn when you are employed, you can still earn when you are on retire. So this shows you that money will now work for you when you are at home. So when you buy annuity, money works for you. You receive money, you earn every month, you see. So we call it and when you buy this annuity, you can buy for, like, we have terms. You can say that I have bought I want to buy annuity for 10 years, for 15 years, or for 20 years, you see. Then the best annuity is when you buy the annuity until death. We call it ROP, return on purchase price. We call it what? Return on purchase price. When you buy ROP, you buy the annuity, you earn until you die. You have gone for retire, you have given your 5 million, so you request a quotation for until you die. So that is the best annuity to buy, guys. Return on purchase price. So till death, you are going to be earning. So that is our annuity. That is about our annuity. And those people who are eligible for annuity is between 40 years to 79 years. The minimum amount, guys, you can put for annuity is 500 Kenyan shillings, 500,000 Kenyan shillings. It is about lump sum. So if you have a pension scheme, of course you cannot lack 500 when you are paid your pension. You cannot lack 500. So instead of putting this 500 into a business, and you see business is about risky, you can purchase annuity. You'll be receiving money every month. So the minimum you can lock this annuity is 5 years. It has minimum years you can lock it for at least 5 years. If you interfere with the term, guys, you have a penalty of 5% of the lump sum amount. If you interfere with the money before the term, there is a penalty of 5%. Sorry, yeah. So guys, I think now you understand about the annuity. You can also put your dependents who will continue receiving your money. You see, guys, there's those people, assume like you have purchased annuity for 10 years, then after 5 years you die. You can put your dependent. You say like, let my children go be receiving the annuity when I die before the term. If you die before 10 years and your annuity is 10 years and you die before 10 years, your children can still be receiving every month money, you see, until maturity. If you put your, if you say you have purchased annuity until death, and you die, you can also name the dependents who can still be continue receiving the money. So it depends with the specifications you have asked for. So I think I've tackled everything. So there is pension and there is annuity. Nimesema, for those people who don't understand English, nimesema hivi, pension inazaa annuity. Ukilipwa pension unaweza kuja unanunua annuity, unapokea pesa kila mwezi kama mtu mwenye anafanya kazi analipwa kila mwezi. That's what I've said, guys. And we have come to the end of this session, guys. Thank you for listening to me. Thank you for watching, guys. I love you, guys. I hope you have learned something. And guys, I'm going to drop my email number. If you need to buy pension scheme, or if you need to purchase our annuity, guys, just email me through that email number. Write a short email, just describe what you want. I'll answer you instantly. I'm going to drop my email number there. So guys, let's talk after this for more discussion, for more information. We'll also book an appointment with you. So guys, thank you for watching. I love you guys.